Welcome to etbfsi.com by the Economic Times. This is Shrishti Sharma, and today we have with us Mr. Sudarshan Chari, Managing Director at DBS Bank. Welcome to the conversation, Mr. Chari. My first question to you: you look after the SME banking, and given the interest rate environment, we've just witnessed a rate pause from RBI after 100 basis points of rate cut. How do you think the cost of borrowing has evolved for MSMEs in FY26? More so when the rates were going down, how was the situation for them? How do you see them going forward? Let's say RBI gives another rate cut. What are your introspection of the situation? Give us a wholesome picture about it.
If one has to look at the time frame from where we started this year to where we are today in the month of October, there has been 100 basis points cut on the benchmark rate, and all of it has got passed on to the MSMEs. Over the last few years, all MSME loans are linked to the external benchmark.
Correct.
And the external benchmark has changed thrice, and all of it would have got passed on to MSMEs. So the overall cost of borrowing from where they started the year, where they are today, it would have seen an improvement. The second bit is that we expect inflation to continue to be low. It was low through the year, and that means that the overall cost of running a business stays muted. So a combination would mean that the borrowing cost is less, cost of doing business is less, so it will enable or support MSMEs in a big way. We also expect that some bit of policy intervention might happen next year, through the course of next year, and that will also get passed on to MSMEs almost immediately. So in a nutshell, the costs have come down, and there is probably further scope to come down in the next 5-6 months, is the way I would put it.
Noted your points. And in terms of the GST rationalize, now that you've spoken about the policy intervention, you've just witnessed some GST rationalization and measures came in for MSMEs. How do you look at those going
Extremely
forward?
positive measures, all aimed at improving consumption, making both mandatory and discretionary spends affordable for the broader consumer, and MSMEs feed into the ecosystem. So if the consumption goes up, the MSMEs directly, indirectly stand to gain. So extremely positive moves. And some of the initial data that's coming out post implementation of the new GST regime is extremely positive news that's coming out. There's a news about Mercedes-Benz selling a car every 6 minutes during Navratri. Talks about the auto volume that has shot up after GST, and a lot of auto ancillary ecosystem, which are all MSMEs, would be feeding into that and would be riding that wave, I would say. So it's extremely positive and highly encouraging.
Noted. Over to the next part of this conversation, I'd like to talk about the cash flow based and data driven lending for MSMEs. How's it fared out? How do you see the future in terms of MSME lending? What kind of measures do you think is going to boost the MSME financing that we've long been talking about? When we speak of growth, MSMEs is one segment that we're looking at. So tell us more from the perspective of the lending patterns and the cash flow based lending and the data driven lending.
So if one has to look at progress we've made over the years, I think there is tremendous amount of progress. The digital infrastructure developed by the government comes in a big way in supporting MSMEs and helping organize data. Data can be used only when it is organized. I think data in India is very well organized for MSMEs to use it for access of capital. Also, if you look at MSMEs in various segments, be it an MSME which is new to credit, be it an MSME which has just started the journey versus a bit of a mature MSME, at different entities in different stages of their life cycle, there is data available which could be potentially used, and lending can be made available or capital flow can be made available. a lender perspective, whatever risks the lender has to sort of underwrite and cover, be it credit risk, be it fraud risk, be it security risk, uh, uh, there is enough data available which can be independently fetched, which can be used intelligently by the lenders to make and ensure that credit flow is done seamlessly to MSMEs, and that's already being seen. Also, if you look at initiatives undertaken by RBI around account aggregator, unified lending interface, is supposed to kind of add more tailwinds to already data usage that's prevalent in the country. So expect a further boom sort of coming in because of these two major initiatives. In fact, ULI can be as strong as UPI at a later date in terms of adoption and usage. More so for the micro enterprises, which is very critical in both in terms of number and value that they bring to the economy. Uh, we in DBS kind of adopted this way back in 2019. We went data first. We started using data in a more intensive way, targeted towards micro and small, and that is something which is coming out very strong for us. And we like to expand on it, do more of it. We also started working on government guarantee schemes, which is CDT MSC, which is promoted by the government in a big way. We've adopted that as well, and the data along with the guarantee is a solid sort of a use case that you take it to the MSMEs for capital solution.
Noted your points. You can elaborate a little more on the account aggregator framework. Since when have you incorporated this into your systems, and what is the kind of difference that you've observed, and to what level do you see AA going?
So, we have adopted AA. I may not be able to explain you the exact timeline because there are nuances to AA. You go in as a user and then subsequently a provider. I think we have enabled on both fronts now. It's a use case which is more for individuals and sole props at this point in time, but it will evolve. And what it focuses on essentially is data fetch, which is available in a common rail, consented infrastructure, so that gives protection to the borrower, and seamless journey, which means that you don't have to lean on the borrower for providing the data. Data could come in very seamlessly, can embed with your journey, and solutions can be rendered to the customer seamlessly. I think such an infrastructure far and few globally also. So India is ahead of the curve from a solution standpoint, and which will go and enable capital provision for MSMEs in a big way.
Right, noted. Let me bring in the geopolitical tensions, the ongoing tensions, the US tariffs that are into play. What is your assessment of India's MSME sector? What is the kind of impact that you are kind of assessing in this particular way? Because this is kind of a breakfast table conversation for everybody nowadays. We don't know if it's going to materialize, what happens next, but I'm sure MSME lending, lending is not something that can, kind of take place immediately. So there are plans, measures in place already. What is your assessment? How are you looking at it?
According to me, it's an evolving situation because whatever measures we get to hear through the night, which is why it's a breakfast conversation. The implementation has just happened maybe 15-20 days prior. In full flow.
Right.
And the impact assessment is yet to be done. If one has to look at the first round of tariff, it was pretty much keeping India at par with most other exporting countries.
Right.
So you could say that the impact was not that high because you are at par. But subsequently, the further rounds of penalty and tariffs in few sectors needs to be seen how impacting it is. But the contrarian view to this is that some of this are mandatory mainstream consumption products that we export. For example, aquaculture and marine exports, or for that matter, pharma. So the alternative for US to create capacities is something that we are not sure of. which means that the tariff impact will be borne by the US consumer more than the producers in India or any other exporting country. But again, this is something that we cannot speculate at this point in time. It is something that is evolving. We will have to assess the impact over time. And tariff as a situation is also an evolving situation, given the way the slew of announcements have happened in the past. So one has to kind of keep an eye on what's going to be the impact. More importantly, government is taking a lot of measures to support the MSMEs or the exporting firms. The government guarantee scheme, the capital ability to provide capital to these MSMEs, interest rate reduction that happened through the year. All of it would mean that some portion of the potential cost or potential impact is kind of absorbed by the policy measures, and it will kind of favor the exporters to kind of keep exporting to the US. But again, it's an evolving situation, is what I would say.
Understood. So this brings me to another aspect of geopolitics, China plus one. How well do you think we are positioned? Well, we have been talking to economists. They were optimistic about it initially. Now, there have been some dwindling lately after what the geopolitics played out. Tell me more about it. How are Indian MSMEs placed in context with the China plus one analogy?
I think that this is something which will evolve, will continue to evolve. Manufacturing is something the global companies and the brands keep looking at India as a factory, and China plus one has been in play for some time. Government measures like PLI has given it a much needed boost. With the capital flow, PLI, overall cost and inflation being under control, we still be a destination preferred for manufacturing. And the demographics also support it broadly. And even the data suggests that. So I don't see any kind of shift basis geopolitics or whatever in the last 6-8 months. I don't see that shifting. It's only that one has to pause and watch. That's the only thing. It's a temporary phase. But my sense is on a long-term basis, we continue to be progressing towards becoming a manufacturing hub for the globe.
Do you see the China plus one materializing substantially for us anytime soon?
What is substantial is very subjective. It will improve from where they are, where it is today, and every year we are making progress. So one has to keep that in mind.
Yeah.
And if you're making progress every year, and overall manufacturing is getting the much needed impetus, I think that should be the barometer rather than seeing whether we're going to take over China or take over the manufacturing. That's not the way to measure it. The way to measure it is, are we making progress? And the answer for that is yes, we are making progress.
Noted. I'll now go to the digital initiatives particularly. Now, there are MSMEs. If you talk about the digital, if you talk about the access, there still are MSMEs. Those are the ones in hinterlands that do not have digital access. Even now, India's DPI has been exemplary for the global south, but that still remains a challenge. Now, from your perspective, you're a foreign bank here. What kind of digital initiatives are helping you reach to the last mile, and what are more initiatives in the pipeline? How is it helping the giving the boost to the MSME lending, the much needed boost to the MSME lending?
As I said, we adopted data or digital led lending way back 5-6 years prior, and we pretty much targeted the micro and the small across the country. And we said we use data and we will make lending available to MSMEs. Subsequently, when we acquired Lakshmi Vilas Bank in 2020, we took the solution to a broader footprint, and now we are pretty much enabled in almost all our branches. We have 490 branches. We're almost enabled in almost all our branches to serve the micro and the small through the digital-led initiative. At the same time, we continue to be phygital. We are omni-channel. So if an MSME wants to make an application in writing in physical form, we still will accept and process it. So we taking care of someone who's yet not up the digital curve, and we are also addressing people who are up the digital curve. But what we are seeing is that incrementally every year the digital adoption is going up. So eventually we sense that almost all of the capital seekers would be digitally enabled, and we're pretty much there to kind of serve them. Products around the government guarantee schemes like CGT, MSC will go and kind of enable more capital, debt capital to be provided to micro and small. And DBS has adopted it straight away, and we have product offerings to take it to the market for that. So we digitally, our products are digitally enabled. We are omni-channel, and we also have products which will enable capital to micro and small.
Sure. If we talk about it from the DBS perspective, how important is the SME, portfolio for you? How big is it for you? And are there any innovations in the pipeline for the sector?
It's a very key piece of our broad India strategy. SME continues to be a fast-growing unit within the bank. We are growing in higher double digits, I would say. As far as the percentage share to the India balance sheet is concerned, we are at between 25 to 30% handle in terms of our overall advances, and we continue to be there because the other units of the bank will also grow. But we keep growing at higher double digits. Product-wise, I think we have most of the products which is targeted towards micro and small, but we are staying close to the market, and we keep bringing in new products which essentially enable access to capital for micro and small. That's the core focus, and digital is the sort of a bedrock through which we reach to our customers.
Sure. To conclude the conversation, help me understand the major challenges and risks that you see in MSME financing.
Challenges is historically known. Challenges is around the risks. Data availability was a challenge. If you look at small companies, disruption, succession, family concerns, family-owned businesses, those remain the broad challenges. The challenges haven't changed. But what has happened is that there's a lot of awareness that's kind of gone into the broader market. Credit behavior has improved. If you see record and data on delinquencies, NPLs, the credit environment has been very, very favorable. And it's been sort of at the lowest in terms of NPL ratios, especially in MSME. So all that are favorable environment. A lot of it is because of initiatives by the regulator, the banking community at large. The data transparency also makes people aware of being credit, I would say, credit conscious.
Right.
Or the credit behavior. It kind of builds your credit behavior, and that is what is going right for India, I would say. And that's where the lenders would participate more in making debt capital available for micro and SMEs.
Sure. Thank you so much, Mr. Chari, for sharing your insights. Thank you for watching EDBFSR.